has risk, but what are the risks that are inherent or some of the factors that would affect the yields in government securities, Kevin?
Thank you. I think it will only be fair if maybe I take a minute or less to explain just the kind of bonds we have and the bills we have.
Okay.
I think we've just delved into the details of rates and everything, and a good number of folks like the gentleman doesn't understand. So there are two types of bonds.
Okay.
We have the fixed deposit bonds and we have the infrastructure bonds. So the difference between both these are issued by the governments. Yeah. So the difference between these two is one is tax bearing and the other one is tax free. So infrastructure bonds are issued. The problem with our country is we don't have an economic calendar, sort of like the US, right? So you can't say in July or August, these are the kind of bonds that will be offered. So we know traditionally that the government issues or auctions a bond every month.
Yes.
But most of the time that will be the fixed coupon, bond, which is the one that attracts interests. So amount, I mean, any tenure or duration of a bond above 10 years, the interest rate on that is 10%. Below 10 years, the interest rate of that is 15%. So infrastructure bonds are traditionally issued once.
Withholding rate.
Withholding. Yes.
Okay.
Withholding tax rate.
Yeah, withholding tax rate.
Right.
So infrastructure bonds traditionally issued once or twice in a year. So one will be issued, like now I think we've already seen two, if I'm not mistaken. And there's a chance we might see another one we call a Christmas gift towards the end of the year.
Okay.
Yeah, so that will be a taxless. And you'll find rates as good as 12.67%. So you give the government 100,000 shillings. Every year you'll be paid 12,600. Semi-annually, of course, now you'll be paid 6,300 after every 6 months.
Okay.
And at the end of the, say, 5 years, if you bought the IFB, you get back your 100,000 and 5,300 again. That is your interest at that point.
And no taxes?
No taxes on the infrastructure bonds. So unfortunately, you can't say when they will be issued, unlike the others that are issued every month.
All right.
So in terms of things to consider, to your question, what's your question again?
The factors that, affect the price, as an investment, when you take a look at the risk. So what would be the things to consider that could affect the prices of it? Just like we say, stocks are volatile. It depends on, I don't know, in this country we don't...
So in fixed income, various things will affect the price of your bond. So one of the things that will affect is if a similar bond has been issued. So you bought a five-year bond, taxable, let's say 15%, and in the next month the government reissues another 5-year bond, and maybe this time, because they didn't get as much money on the first one, this time they'd say to give a better rate. So the aggregated average rate goes higher. So you bought your bond at, say, the coupon says 12.5%, and the next bond is issuing coupon at 12.97%. So automatically your bond becomes less valuable. So and a couple of other things also in terms of how the government needs money, where similar papers which I've just mentioned are trading at, and if alternative investments are performing better than the bond market. So those are some of the things that will affect the price of your bond.